are, you know, what strategy should I use? How do I fix my psychology? You know, how do I fix, you know, these poor trading habits, etc., etc. Okay, so from a broader scale, these are the questions that I receive on a day-to-day basis. And one thing I've noticed was that I've been trying to kind of think about all of the people I know in the industry who are legit, who are trading millions in funds and things like this, people that you don't have any sort of kind of public figure, you know, they're no public figure, or you won't find them on Instagram and things like this. And the one thing that they all have in common is they either do two things, okay? If we're talking about strategy, okay, if we're talking about strategy itself of navigating through the markets, they do two things. And one of them, you know, is they work with statistics, and all of their decisions are based off some sort of statistical edge. And the second one is they work with fundamentals. Sometimes they have both, but all of them have one of them. And that's something that I've noticed over the years, that anyone I personally know who is legit in this game and who is actually making money consistently over and over again has one of those two things, is either working with statistics and their decisions are based off some sort of statistical edge, or they are using very, very, very basic technicals, support and resistance, moving averages, engulfing candles, stochastic, or whatever it may be, and backing that up with fundamentals. They're the two things that every single person I personally know who is legit, that's what they do. And it's always interesting because when we look online, when we look on the Instagram world, when you look on YouTube, there are very, very, very few people out there I can say that are anyway experienced or educated on those subjects. And that is why getting a mentor is so important, and the right mentor, because unfortunately, this game takes a long time to gain experience in. And unfortunately, those experiences that you make, they're usually going to cost you a lot of money. Because, you know, when you start off, you don't respect risk and things like this. And then unfortunately, the other side is we're almost naive in a way that we think we're stubborn. We don't think we need anyone to teach us. We think we can learn it all from YouTube and things like this. And then we actually delay the amount of time it takes to actually ever get successful or reach consistency, because we were never learning the right things. You know, like, at the end of the day, if you want to trade patterns, if you want to trade technicals, we'll start off talking about the statistical side of stuff here, okay? If you want to trade the technicals and, you know, the patterns and the order blocks and all of this sort of stuff, you need a statistical edge. You do, and I'm talking about the long term here. I'm not talking about how a lot of you here are just having maybe a little bit of success for the last 3 months and you got a prop account and you got a few payouts. I'm talking about you surviving this game for the next 5 to 10 years, okay? Because that's we need to be thinking long term. You need some sort of a statistical edge in there. If you are overwhelmed and intimidated by the fundamentals and you find it almost challenging, so you decide to tell yourself and convince yourself that I don't need to understand this, when it is the one driving factor that is causing the market to move it's why the market is moving in the first place. And you need to have a serious conversation with yourself of, okay, well, which one am I going to pick then? Which one suits my personality best? If you are someone who is very, very good at details, if you are very good with patterns, and you spot, even in people, you know, you'll notice these qualities in yourself if you're good at even spotting patterns of behavior with different individuals and, you know, things like that. Not necessarily being good with numbers, that's not what I mean by patterns, but just in your every day-to-day in the every day-to-day world, like what you're doing on a day-to-day basis. If you're very good with patterns and if you're very good with spotting them, you will probably lean more towards this statistical edge. You will lean more towards understanding the failure rates and finding things that have a statistical edge in the markets. Like one of my YouTube videos that I've discussed over and over again. the opening price, the weekly opening price. Some of you will use the daily opening price to gauge how the sessions are placed to be able to make a better daily bias, especially around New York Open or the Equity Open. But we can actually use this on a broader scale, and if you look at that YouTube video, you'll see there's a statistical edge there that after Monday closes, the weekly open on euro dollar and pound dollar has around an 80% probability that the market will come back to that opening price by the end of the week. That is a statistical edge. Now all you need to do is you need to formulate a way of navigating your entry in a way that you can maximize your reward and minimize your risk. And use this edge to your advantage, and there's no second guessing here. You don't need to think. If you make your entries mechanical enough or even automated, there's no need to think here. And at this point now, it's just about executing and letting your edge do the work, letting the statistics that you've worked hard on collecting come true and show you as time goes out and as the sample size increases that this can consistently make yourself a profit. And if you don't want to go down that route, if you're not a person who's detailed, maybe you're someone who is really good at digesting large amounts of information, and if that's you, well then I would say go down the fundamental route, understand it, spend the next, we're in May now, okay, we're in May. Like, why can't you invest into the next 6 to 7 months 30 minutes to an hour every morning to just trying to understand the fundamentals, reading a news article, digesting it, understanding it? If you can't invest 30 minutes into something that you say that you're passionate about, that you truly want, you have to ask yourself how true are your intentions really, because that's the reality of it. You have to put work into this game that other people aren't willing to put in, and it's going to take a lot more time than you ever expected. But my point here today is to come onto this live and give you the two things that I see over and over and over again between all the people who I personally know are consistently profitable and are big players in the game. They, one, either work with statistics and all of their decisions are based off some sort of statistical edge. There's no, I'm looking at this order block here, or I'm looking at this trend line here, or support line here. There's none of that. And if there is, what they're doing is they're saying they have a specific pattern. They're saying, well, this has a 60% probability of playing out. They understand the numbers, and that's the difference. There's no thinking, there's reacting, because they know the numbers, and they know at that point then it's about letting the edge do the hard work. And if you're not into that, if you're more of a longer term trader and you're not too sure how to maybe form a statistical edge, which is what we personally talk about in the Conquer mentorship itself, that's what I specialize in, is the statistics side of things, you will gravitate more towards the fundamentals. But in my personal opinion, and I can only talk in my opinion here from the people I know personally who trade, millions and millions, these individuals have two things. It's either statistics or a fundamental point of view, and you need one of them. Some of them have two, but most of them only have one. And I think if you are taking a step back, and if you're really trying to, make it in this game, and you're trying to find what path do you take, I've just simplified it for you. And it's now just about taking a step back, putting that ego to the side and saying to yourself, right, I've been given two options here to take, two options. And all I need to do is choose one. And the best thing you can do is to look at your own self and say, okay, where do my strengths already lie? Like in your current life right now. Like I said, are you a person who is very good with details, very good at problem solving, good at spotting patterns in people or in just everyday life? You may lead more to the statistical side of things. If you're someone who's very good at digesting large amounts of information, simplifying it and creating context of a larger picture and then bringing it down into more specific details that you need to use, literally critical and logical thinking. If that's you as a person, you may lean more towards the fundamental side of things. But don't just pick the statistical side of things because you may find it easier, okay? Actually pick that one thing that is going to help you and that lines up with your qualities that you already have. Don't try to be the other person that you see on Twitter, or to be me, or to be your mentor that you currently have, because they're not you. They don't have your life experiences. They don't have your qualities. You may have a quality that you don't use that your mentor wished he or she had. And I think if people focused on their strengths a lot more, they would find this game a lot easier. It's like when people are focusing on what they can't control all the time. Everyone's always trying to perfect what they can't control, and they're putting so many valuable errors into it, when that is the one reason why they're becoming so overwhelmed, and the one reason why they're not seeing any progress, because they're trying to control the things that you can't control. When in reality, if they double down on the things they can, which are usually the very basic foundations of what they're trying to do, they would see a lot more growth in whatever they're trying to do. And that's in sports, that's in trading, that's in anything. It's, that 80-20 rule. What's going to give me 80% of the results for 20%, of my input? What can I put a little amount of effort in, or even double the amount of effort in, that will give me maximum results? Let's see some questions here. Would you say trader psychology is a fundamental driver? Yeah. Essentially, like when we say like fundamentals, macro drivers, whatever, fundamental can actually be quite like a broader term. So some people will say that the terminal, and this is where terminology comes into play, where it's a problem. Some people will say that fundamentals is just news driven. Some people, then others will say that fundamentals is much more of a broader outlook of when it comes to sentiment. When it even comes to like things like COT reports, some people will put the fundamental data underneath that as well. So when it comes to terminology, I don't, that's another thing where people focus too much on, where it doesn't really have that much of an important play here. It's like the order block, the supply and demand zone, the V pattern, they're all the exact same things. But they have just been remarketed over and over again to throw flashy objects at you, to basically make sure that you have that you take no action at all, because you're completely overwhelmed, and then you become paralyzed by the amount of information you're digesting, and then you've no mentor to structure that information for you to be able to consistently take a profit from the market. And that's the whole point of this live here. If you're only coming on here now at this moment, I was saying that there's two things, and you only need to pick one to actually take the right direction in this game. And the two things that I see across all successful traders who I personally know, who manage large amounts of capital, is they either, one, work with statistics, and all the decisions are based off statistics. There's no thinking involved, only reacting when those statistical edges line up in the market. The second one is they have basic technical analysis but a strong fundamental understanding. If you can pick one of them, you have simplified your trading down to a whole, and now you know exactly where to bring your focus to. There's no need to overcomplicate it anymore. There's like all these strategies that are coming out where people say like SMC, people make money from that, for example, but it's a really new thing in the industry when we talk about like the marketing side of it. What they're doing isn't new, but they've actually managed to overcomplicate the entire process completely, to the point where people actually don't know now what they need to double down on. They don't know what holds weight over something else, and that causes them to become completely overwhelmed. You've nearly, these individuals almost have a 40-part checklist before they even enter a trade, and we can't react off that. That's complete. You're throwing so much friction into the decision-making process. It becomes almost impossible to react in your flow state to your highest potential. So, keep things simple but detailed. Find out what your strengths are and double down on them. Stop trying to focus on your weakness and bring them up. If you're weak in some sort of an area, fuck it. Like, that's the way it is. I would be considered as my personality, I would have deep emotions, like I probably an emotional person in a way, but I've developed defense systems around that in my trading by becoming very systematical, very statistical. No decisions are really based off intuition. It's exactly X plus Y equals trade idea, and that allows me to focus on what I'm good at, focus on my strengths, and then I don't need to worry about what weaknesses I have in this industry. I'm doubling down on what I do best, and I'm not focusing on what I can't control. Let me have a look at these questions here. What would you do? What would you do when you meet a criteria you have not seen before, but it aligns with your strategy? I'm not too sure how something would align with your strategy if you haven't seen it before. And if there's any bit of uncertainty, don't take the trade. And that's what I'm saying again, lining up with your strengths. Stop trying to take the hard trade. Take the easy trades. There is power in taking the easy trades. There is so much power in sitting back every single week and doing nothing but taking the easy trade setups. Why are you trying to be the hero, trying to catch every single move? You're not playing the same game as I'm playing. You're playing a game of trying to prove to your ego, your skill, and how great you are as a trader. And then there's other people out here that have no stress at all because they're either statistically driven or fundamentally driven, and they're not trying to take every trade. They're looking for the easy trades, the easy money, and they understand that I'm not going to create another 9-to-5 job for myself. I'm not going to sit there all day and try and trade every single movement that there is. There's no point in doing that. Why? The reason why a lot of you came into this game was for more time. So, keep things simple, basically. We can go off on so many different rants here with this. Does SMC work? Yes, of course it does. I've said this 100 times. Do I like SMC? No. Do I think it's ruined the industry a bit? Yes, 100%. Because the terminology is wrong. What's being taught is wrong. A lot of the people that are trading it have their experience only goes as far as trading a prop account. And then other people learn from these individuals who think they have enough experience to talk on the subject, and then they don't, and then it just spirals into this chaos. But the problem with smart money concepts is you will think that it makes sense to you when you look back in hindsight, because now when you look at smart money concepts and you look at a chart, what's the first thing everyone does? They go, wow, sniper entries. Wow, I can see why the market reacted to the pip to this order block, etc. That's what people say. And in hindsight, then it starts to make sense to you. However, when you take it into a live market, then you're saying to yourself, why is it reacting off this order block and not this one? Why is it taking to this liquidity pool and not this one? And that's the only reason why that's happening, is because people don't realize smart money concepts needs a level of intuition which is only created by, or which is only developed by, years and years of chart experience. You can't build intuition off no chart experience, but yet a lot of you come in and treat this SMC style as a mechanical approach, thinking that it's like this step-by-step approach, but it's not. There is a level of intuition that's involved, and the way I can prove that to you, for anyone that thinks I'm talking bullshit here, is that there are far too many ifs, buts, and variants to ever really develop a statistical approach around it, and that is my personal opinion. Have you looked into SMC, etc.? Yes, of course I have. I would never comment on a subject that I haven't looked into myself and talk about it so confidently. And that's why I say there's people making money there, but understand that for a lot of you, you're realistically making the game a lot more difficult than it has to be. And I'll say it again for the people that are coming on here. When I was looking today to come onto this live, there are two things that I've noticed about all the individuals that I've seen make money in the markets. And that is, they work with a statistical approach or fundamental approach. Some have both, but the majority only have one. If you can pick one of them, line it up with your strengths, you're going to make money. And that's the other thing. A lot of you just don't know where your strengths lie. And that's why having a mentor is also so important. Because you may have a lot of information. You may actually understand this game pretty well. And I would actually imagine, from my own experience of like teaching people and stuff like this, that a lot of people do have enough information already to be consistently profitable, but they've never had a mentor to take all the information they already have up here and structure it in a way that allows them to consistently turn a profit. And that's the problem. It's about structuring that chaos in your mind, understanding what you need to double down on, what holds more weight over others, and then how to structure that information in a way that you can develop a consistent process of turning a profit from the market on a consistent basis. Tell me the time frame for Forex. It doesn't matter. It depends on what strategy you're trading. And really, time frame doesn't mean shit in reality. It's context that matters here. This is what I mean again. People are like, what time frame should I use? It's about understanding what are the things that really matter. Does time frame really matter? The only thing it really matters for is what style of trader you are. If you're a swing trader, well, you want to be looking at the larger picture. If you're an intraday, you're more focused on what's now. Don't overcomplicate things. Give an example of defense on your emotional weakness. So if I'm a very emotional individual, I would want to remove as many weak points in my strategy that could allow me. So basically, if I'm an emotional person and I want to make sure that those emotions never come into the decision-making process, well, let's simplify it. Then I need to make sure that my decision-making process is designed in a way where it will never need any intuition, because if I bring intuition involved, then I could potentially be bringing emotion involved as well, because I'm thinking about the larger context of the situation, but I could also be looking at the larger context in a way that's now based off stress, which tunnels our vision a lot more. So the only way to do that is to become very mechanical or systematical, or in a way that you want to design a strategy where there's no thinking involved, where, like I said before, I work with statistics all the time. I'm crunching the numbers. I don't make decisions based off intuition or how I feel, or because the V pattern or whatever is facing up. I'm basing them off statistics that have played out historically over time, and that allows me to remove as much emotions as possible from the decision-making process, because when you have clarity and when you understand the game, losing, all of that, it's no longer really a psychological problem. If you know the odds, you know the game. If you don't know the odds, you don't know the game. It's as simple as that. What do I think about prop firms? Yeah, it's my view on prop firms has changed a lot over the years. Didn't like them at all. Yeah, I wasn't a big fan about them. Now we see prop firms coming into the place, and they've no time limits and things like this, and now they're making it a little bit more realistic. But at the end of the day, just be aware of what their intentions are. They will tell you that they want the best for their traders and the relationship with their traders, but they're not really prop firms. It's essentially a pyramid scheme. It's becoming more of a pyramid scheme, especially as they're taking on affiliates and things like this. So use them wisely. They're good for consistent traders, for people who are already consistent. But if you're not consistent and you've never been able to reach the target, or if you haven't even had 3 to 4 months of consistent profits, what do you think is going to change now just because you bought a challenge? Like, people do this all the time. They buy challenges without even being consistently profitable. So for the ones who are consistently profitable, my personal opinion, don't focus on a long-term relationship with these prop shops. That's what they are. They're not called prop firms. They're called prop shops. That's what they actually are called. They're called firms because it sounds a little bit better, but they're prop shops. And you can look that term up online. Because that's not a prop firm. What we have on Instagram and all this, that's not what a prop firm is. But if you are a consistently profitable trader and you are using these prop firms, which I'm not saying is a bad thing at all, I'm saying use them correctly. And the way I would personally use them correctly is to literally withdraw everything as possible, everything that you can really, and put that into your trading account or somewhere saving account, to basically use to build your initial capital that you have now, your initial live capital. Just use them as a tool to build your own capital, or to take that money and invest it into something else. Do not keep this thing in your mind where this is going to be a long-term relationship, because in my personal opinion, they're becoming far too loud. The regulations will just come in at some point. Nobody, you look back in society, the majority never win, and it looks that like the majority are winning far too much lately. How do you journal your emotions in a trading session? So you want to map out the behaviors. First of all, you get into a trade, you write down how are you feeling, like what thoughts come into your head, as if you're actually speaking out loud. You're in the trade, you see. This is the best example I can give you, okay? So you're in a trading opportunity, you have a piece of paper in front of you, and you're in this live trade. And what starts to happen? This will actually, it'll more so pinpoint weaknesses in your strategy as well. if you're in a trade idea and all of a sudden you find these questions coming into your head saying, I want to move to break even right now. I think I should move to break. I think I should move to break even right now. I think I should take profits right now. I might use this moving average to manage my trades. They're all giving you signals that you actually don't have clarity behind your trade management. You don't know when to move to break even. You start adding in a random indicator. You're not sure if you should take profits, or you're just randomly taking profits because you're uncomfortable with how much you're in profit. That is a sign of a trader who lacks clarity, that lacks a consistent process. That is an emotional trader. That is someone who does not have clear clarity behind what they're doing, and therefore will always have this uncomfortable anxiety feeling in their stomach. And this is what I say: if you use those emotions and those thoughts as a signal of where you need to drive your focus to, and if you fix those problems, and then you come back and you listen more to what you're thinking and the thoughts that come into your head and the questions that you ask yourself, and then you work towards them again, and if you keep doing that over and over and over again, what you're soon going to find is that these emotions that you once had are no longer a factor. They're no longer a big player up here in your head, because you've solved the uncertainty problem, or you've actually just come to acceptance of, okay, well, actually that's something I can't control, but I can manage my risk, I can manage what trades I do enter, and I can manage understanding the statistics behind my strategy. So map out the behavior, I would say. What trading strategy do you use? It's a strategy and system I've developed myself, using statistical edges, etc., etc. And I tend to use the only level of really intuition, I suppose, that will come into play is that I've found a way of using the sessions themselves and specific timing periods to be able to create a bias for each session. So from Asia to London to New York, and then actually use that same understanding for a larger picture down to the day, to the week, to the month, etc. So, the market is fractal. It can be used on a larger scale as well. Can I only trade with context? How else do you trade without context? Like, you need context to form an idea in the first place. So I'm not too sure what you mean by that question. Do you still meet situation you have not met before after 8 years of experience? I'm not too sure what you mean by that question, if you can rephrase it. What would you say is enough backtesting data to put some risk in the market? What would you say is enough backtesting data to put some risk in the market, or just start trading live accounts? What would you say is enough backtesting? So when it comes to backtesting data, it depends on what you want. Like, are we talking about that you finally formulated a trading idea and now you want to potentially take that live? Well, then I would say as much as possible, but really just, if you're looking for a number, which I don't like generalizing things because things have to be specific in this game, I would say like 3 to 5 years is usually a good amount. But when it comes to patterns and things like that, yeah, see, this is the thing. If you're trying to backtest a strategy and you do 3 years of data, but then you look and zoom out on a monthly chart and you all of a sudden notice that those 3 years were all in a complete downtrend, well, now your data is slightly manipulated because you've never experienced any ranging markets, choppy markets, or uptrends. So the broader the sample size here, it's going to take as many market phases and conditions into context, which is obviously going to give you a much more accurate understanding of what to expect. Will I upload this live? Yes. Which prop firm can you recommend? I don't recommend any here. What's your take on prop firm? I've just spoke about that. Is 4 years of backtested data enough? Did it answer the questions that you need? Do you feel confident enough with that strategy? Did you experience all market phases during that strategy as well? That's a major factor, just like I discussed. You might have 4 years of back-tested data, but how valuable is that data going to be if it was just in one single trend for the entire 4 years? You know, it's not really giving you enough context to work with. So yeah, at this point, we're going to finish the live. I'm going to upload this live. If you're only coming into this live now, you've missed two important things that we've discussed about the two qualities that I've seen across, you know, any larger trader even than myself, and how they've consistently turned a profit. So I'm going to upload this live so you can watch this again and learn something from it. So take care.